This is Alan Bush with ADMIS. In the stock index futures, we did see prices under a little pressure in the overnight trade. This after the OECD reduced the growth expectations for the global economy for next year. Their new prediction is now that growth in the global economy will be at 3.6%. Previously, last May, they were predicting 4% growth. So that a bit of a negative, but we do feel that as long as the Fed's quantitative easing program is intact, that will come to the rescue of any break that we might see in stock index futures. So from here, look for higher prices today, higher prices longer term. Of course, we did see new historical highs in the S&P and the Dow yesterday. So nothing really changing. Any breaks on any type of bad news most likely is a buying opportunity for stock index futures. Over in the foreign currencies, seeing the euro currency trading higher. This after an index of investor confidence coming in stronger than expected, in fact coming in at a 4-year high. Also, we continue to feel that the dollar index will work lower as the QE continues to keep U.S. short-term interest rates under pressure, and this is a trend that is likely to last for quite some time, probably well into next year. So look for lower in the dollar index, higher in almost all of the other currencies. And that would include the euro currency, the Swiss franc, the pound, the Canadian dollar, and the Australian dollar. One currency I would avoid, though, is the Japanese yen. The reason for this is that their quantitative easing program in Japan is actually larger than what we have here in the U.S. on a per capita basis. Over in the interest rate markets, after several days of higher prices, we are seeing a little pressure today. However, we feel that the quantitative easing program, which is dominating all of these financial markets, will take Treasuries from lower on the day that we are seeing now back up to higher on the day. We also feel that the longer-term trend for Treasuries is higher for the same reason. Basically, that QE will continue much longer than most analysts are anticipating. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.